We are now going to look at the exemptions to donations tax. So these are types of donations or types of situations where maybe the person who is receiving the donation determines it, or where the person who is making it determines it. But these are donations where there will be no donations tax. Now, if you go and you give your mother a birthday present, or your best friend a birthday present, and let's say you give him 500 rands. Right, should there be donations tax on it? There is property, because the money is property. There is a donation, because if you're giving someone a birthday present, you're being nice. You're not getting anything in return, and you are a resident. So there should be donations tax considered. So have you been paying donations tax? Most of us haven't. Why haven't we? Right, so even if you haven't known it, I'll show you why. So we get two types of exemptions. We get specific exemptions and general exemptions. Specific exemptions in section 56.1, general exemptions section 56.2. They are both very, very, very important. Here are the steps that I want you to follow though when you're looking at donations tax. The first thing is you'll determine if there's a donation, if there's a donation of property by a resident, or if there's a deemed donation. So you'll remember with the deemed donations, section 57, if a company makes it on behalf of a shareholder, section 57A, managed community property, section 58, if you give one at a sell or donate an asset or sell an asset rather at less than its market value. Then there will be donations tax. So the first thing is you'll determine, is there donations tax? Then you will consider, are there any specific exemptions? So make sure you first look at specific exemptions. You say, is this specifically exempt? Or, and if it's not, then you say, is there a general exemption still available? And if there's anything left, you calculate donations tax. Donations tax is mostly at 20%, but really very recently 25% has been introduced as well, which we'll talk about. Right, so the specific exemptions in section 56.1. So these are types of exemptions that if you see them, you need to know that there's no donations tax on it. So please guys, you must work through section 56.1. Here are some of the more common and important ones. First one is donations to a spouse. Discussed in section 56.1a and b. It's different situations depending on if it's a antenuptial contract and so forth. But basically, if you take anything to your spouse, there's no donations tax. Donations mortis causa. This one we've heard, and you might recall. Let me remind you what that means. Donation mortis causa means it's a donation in contemplation of death. Now, what does this mean? So this is the easiest example to use. This is when I think I might die doing something. So I say, if I die skydiving today, you can take my car. That is a donation mortis causa. So when are you going to get the car? If I die today doing skydiving. If I die tomorrow in a car accident, not today, so I go skydiving and I'm fine, tomorrow I die in a car accident, you will not get it. It must be specific. Today, or if I die doing a skydiving, it must be specific. Right. That is exempt from donations tax. The reason for that is because it will be included in estate duty, but we'll study that separately. Next one is a donation where the beneficiary will not receive the benefit until the death of the donor. So this is where I say I'm going to donate something to you, but you can't get it until I die. Now, students often say to me, but those things are the same. Donation mortis causa, and this one where you won't get the donation until you die. But they're not the same. Right. So first up, guys, it's just different section references, but both are exempt, so I don't want you to overthink this. But let me explain to you. A donation mortis causa, which we looked at already, the one in contemplation of death, is where I say, if I die skydiving today, you can take my car. So I say to you, if I don't die today skydiving, then you don't get it. What is the difference between that and this next one? The next one is where I say to you, you will definitely get my car, but only once I'm dead. So what does that mean? What's the difference between the two? In the first one is, I must die doing something specific, skydiving today. The other one is, I say, you will get my car. Maybe I'll die tomorrow, maybe I'll die a month from now, maybe I'll die 10 years from now. Doesn't matter, at some point you are going to get the car then. So can you see the difference there? The one, I must do something specific, and the other one is, you will definitely get it, you just have to wait for me to die. That's the difference. Right, if you cancel a donation within 6 months, so I make a donation to you today, 3 months later I say to you, sorry, I've changed my mind, then it's no donations tax, it will be exempt. Right, there might have to be a refund if you've paid it already. This one I want you to just pay attention to. Remember we said that property can be situated anywhere in the world. Now we say it will be exempt from donations tax if you make a donation of property which is situated outside of South Africa. But important, these requirements must be met, one of these at least. It must have been acquired by the resident before the person became a resident of South Africa. So for example, let's say I was born in America and I have a flat and I bought a flat there, and then when I was 50 years old I immigrated to South Africa, so I became a South African resident, but I still have the flat in America, and now I donate that flat. There will be no donations tax on it because I got that flat before I became a resident. Okay, next one, if I'm inherited from a non-resident. So I was born in South Africa, my aunt is born in America, she donates her flat in America to me, and now I donate that flat to someone else. There's no donations tax. Well, the last one, if an asset was purchased with the funds from the sale of that asset, from the asset discussed in one of the above situations. Okay, so, first one, what it means is, so I was born in America, and I had a flat in New York there. So if I donate that flat, there's no donations tax, we know that. Okay, but here's the other situation. And I'll take that flat and I sell it for, well, let's say I sell it for 10 million rands. And I take that 10 million rands and I buy a house in South Africa. And then I take that house in South Africa and I donate it to someone. That house in South Africa will also still be exempt. Why? Because I bought that asset, this house, with the funds from the sale of the first asset. So they're trying to establish it to the money. Right, so they're trying to link it to the money. Where did it come from? The money basically came from New York. That's basically where it comes from. Right, same with the one inherited to one non-resident. I sell my aunt's flat, buy something new, and then that new asset I donate also be exempt. Any donations to the government or a public benefit organization will be specifically exempt. If I give you a donation, but it will be included in your gross income, then it will not be subject to donations tax. So this is just the idea to not have it taxed twice. So let's say you did a very good job this year, and I say, I'm so impressed, here's a donation of money to you. You will be taxed on that because it will be linked to your job performed, so you'll be taxed in gross income. Then there will be no donations tax. Okay, important here, if a donation is made by a trust, there will be no donations tax. Right, so let me explain to you like this. Mr. X donates to a trust, and the trust donates to Mr. A. This donation that Mr. X makes to the trust will be subject to donations tax, but this donation that the trust makes to Mr. A, that will be exempt. Right? Then guys, I mentioned this one to you before, donations by public companies, important, limited companies, they are exempt from donations tax. If a donation is made to a resident company that is part of the same group of companies, so one company, so X Limited or X Pty Limited and Y Pty Limited are part of the same group, holding company and subsidiary. If they make a donation to each other, there will be no donations tax. Right, and then the last one, guys, and this I just want you to see is section 56(2)(c), so not everything else is one. The last one is super important. And this one says, if you make a donation which is considered a bona fide, so bona fide means genuine, maintenance contribution, there will be no donations tax. So what does this mean? If I give money to my child, for my child to go to school or to pay university or to buy food, that is considered maintenance. So that will not have donations tax on it. So, for example, here's another one. My aunt needs to have a heart transplant, and the operation is going to cost her 500,000 rands. I donate 500,000 rands to my aunt. That will be for maintenance. So it will be exempt. Can you think if this did not exist, what the problem would be? Then if I make something like this, it's a proper donation to try and help save someone's life, then I'll have to pay the nation's tax on it. That would be insane, right? Now, what I want you to understand here is that the commissioner must deem it to be reasonable. So what I want you to see is an example. If I have a house, and I say to my child, you can stay in the house for free, that is a donation. I'm giving them the right to occupy property. It is a donation, okay? But it will be in maintenance because you're giving a person a place to stay. It's to live. If I, however, go and I donate the house to my son, so I say, I'm not just giving you the right to stay in it, I'm saying here it's now your property. If I do that, the commissioner will not deem it to be reasonable and there will be the nation's tax. Because you don't have to give someone the actual asset. It's valuable to own an asset. That is why you can't just give that away. Right, guys, and then I said, if you don't have a specific exemption, you have to look at the general exemptions. So what are the general exemptions? There are two of them. There are one for persons that are not natural persons, so like companies, trusts, and one for natural persons. Right, if a non-natural person makes donations, they can get 10,000 rands per year as an exemption on casual gifts. So what does that mean? Casual gifts are gifts that you give to people that work for you, for example, but it's casual gifts are things like Christmas gifts, wedding gifts, birthday gifts. So if I'm a company, I'm XP2I Limited, and one of my employees is getting married and I give them 5,000 rands as a wedding gift, that will be exempt because they'll say 5,000 rands, you can have up to 10,000 rands per year exempt. So that full 5,000 will be exempt and there'll be 5,000 left. Okay, but if I go XP2I Limited and I give people a car worth 100,000 rands, that will not necessarily be considered a casual gift or a million rands car. So they'll have to give you some indication. If they let's call it casual gifts or just a wedding gift, whatever, then you use it. But what I'm trying to illustrate to you guys here is you can't make absurdly massive gifts. That will not qualify for it. Right. If your company started halfway through the year, so let's say you only traded for 6 months, you've got a December year end, but your company started on the 1st of July, that's when it started, you'll have for those 6 months over there, you'll have to say 10,000 times 6 over 12. So there's only 5,000 rands available there. It does not accumulate. That means year 1, year 2, if I didn't use anything in year 1, I don't have 10,000 from last year plus 10,000 from this year, 20,000. Okay, you only get 10,000 per year. Right, guys, this is not as common, much more common for natural persons. So you and I, remember I asked you, why aren't you paying donations tax if you're giving people Christmas gifts and birthday gifts? It's because of the 100,000 rands per annum exemption. Right, this is discussed in section 56.2. If you're a natural person, you and me, you can donate up to 100,000 rands a year and you will not have any donations tax on it. So let's say I give my son a car worth 800,000 rands, 100,000 rands of that will be exempt, so the donation will only be 700,000. If I give my son a car worth 80,000 rands, I will use up the full 80,000 rands, but there will be 20,000 rands left. Okay, so this also does not accumulate, so you get 100,000 rands per year. What you don't use, you lose. Use it or lose it. Right? You get a new one every year on the 1st of March. Why on the 1st of March, guys? Because that's the beginning of the tax year for natural persons. Okay, so do be on the lookout for that, and you'll see that definitely in questions and in examples.